Hey, welcome back to The Dive. Today on the show, we have Lobo Tiggre from the Independent Speculator back. But before we bring Lobo on, I just want to quickly remind you to tap on that subscribe button. Hey Lobo, welcome back to The Dive.
Happy to be back with you, Cassandra.
Yeah, we're happy to have you back. Okay, so last night, gold got whacked at the start of Asian trading. 3,000 contracts with a notional value of $500 million exchanged hands in under 1 minute. What is your take on the Sunday night gold crash?
Well, that's been the furor on Twitter, and the bigger number is $4 billion. And in the middle of the night. Okay, so I get it that if you're trying to sell and you want the best price possible when you sell, why would you do that in the middle of the night? I understand that argument. On the other hand, it's not the middle of the night in Asia. And we had material changes in the market on Friday. And I remember going into the close on Friday that numerous commentators were saying, well, let's see what happens Sunday night when the market's open. Because there were people that were already closed out of their trades who didn't have a chance to respond to Friday. So actually, I didn't predict it. I'm not saying I have a crystal ball, but I was already on the lookout for what might happen Friday night. So when that cliff happened, I posted a picture. But the funny thing is that it also turned around right away. It didn't come right back up to where it was, but there was like this knee-jerk reaction and it came back. And my question for the manipulation explanation is, like, to me, manipulation makes sense when there's no reason for this, that nothing else happened. Then, why do we get this sudden massive move? But we did have reason. We had cause. We had events on Friday. And then we had, at the same time, you had the dollar go like this and you had gold go like that. And then in the turnaround, you also had the dollar curve back down and you had gold come back up. So it wasn't just like this out of the blue thing that made no sense, no reason. There was proximal cause in the market, and that raises the bar for the manipulation explanation. So what do I make of that? I'm not going to make any friends saying this because people love to hate the manipulators. And I'm not saying there's no manipulation. All I'm saying is that when you see market forces that explain the data, that raises the bar for the manipulation thesis.
Okay, so let's talk about the SEC chair, Gary Gensler, and crypto. He recently gave a speech about cryptocurrency and his intention to protect investors. Do you think that more regulation is a good thing for cryptocurrencies?
Well, I'm an anarchist. I like the original idea of the cryptos as being lawless in the good sense of that word, because the law is often corrupt and counterproductive, especially for the little guy, the average person. So, and money is so important that I just don't think governments can be trusted with it. So to my mind, the advent of cryptos was a market response to government mismanagement of money supply. So I was all for it. Now the valuations, what is it worth? That's always been a problem for me. And I'd like to see cryptos that have some relation to something real that I can put a valuation on, but that's a separate question. So I like the idea. Now, regulation comes in, and of course that makes it possible for institutions to get on board. They can't invest or play with something that's on the gray spaces, if not in the black market. So it opens up the market. It makes the market bigger, more accessible to lots of people. And if that's what you want mainstream acceptance, then regulatory clarity, as they like to say, clarity is a good thing. But of course, that clarity is also a restriction. If what you wanted was the freedom to create new financial structures and vehicles and ways and means of doing things out there without government help, then it's a bad thing. To my mind, though, really what everybody probably wants to know is what's going to happen to the price of Bitcoin if there's much more serious regulation, or if it's banned. What if all this, pussyfooting around with these little bits of, know your customer? What if that's not really the end game here? The end game is Fed dollar, and we don't want no competition, and we're going to ban everything else. If that happens, obviously that's very bad for the prices of the cryptos, because all the institutional players, all the people that have been inching into this space, suddenly they go back out. And I understand that the cryptos would actually survive this. I understand that the governments can't shut them down. And maybe at some future time, the ledger survives. It comes back with or without any help from the government. But do I want to pay $45,000 for a Bitcoin today when it's possible that governments could whack that price, just way down? 90% haircut is possible here if some major government, the EU or whatever, comes out and says, we're banning this stuff. So yeah, regulation, friend or foe, depends on your view. But I think the big thing that all people in the space need to clarity on is whether it's really going to get banned, whether there's going to be a war on cryptos or non-government cryptos. That's the question to keep an eye on.
So speaking of regulations, the White House backed a provision in the bipartisan bill which raises money through tax rules on cryptocurrency transactions. Do you believe this provision will strengthen tax compliance?
Well, I'm neither a tax expert nor a crypto expert. We're talking about this because it's part of the investment space, but I'm not a technologist. I'm not sure that I'm qualified to answer that question. But any tax, a tax is a burden. It's a break. Any tax, in my view, as a free marketeer, any tax is not help. They're going to tax everything they can to try to pretend to balance the books and all the spending they want to do. In my mind, it's the spending you need to keep an eye on, because they're not going to balance the books. It's not going to be paid for. The deficits are going to balloon, in my view. Mm-hmm. And that ultimately debases the currency, which gets to the real where the rubber hits the road. What are the implications of that? How this regulation is going to impact. Ask an expert. That's not me. Sorry.
So you noted in one of your interviews that people don't trust inflation rates and that some predict upcoming deflation. Do you see any likelihood of a deflationary scenario?
Well, they're kind of two separate questions, Cassandra. It's not that you don't trust inflation, it's that you don't trust the government data on inflation. And you have alternatives like shadow stats out there, which have much more alarming numbers. But the reality for people is they go in the store, they fill up their gas tank. I just paid $5.45 a gallon in California on my way to drop off a rental car at the airport. I mean, you see things like that, and you just know that the inflation, or you feel, whatever you feel that the inflation is higher than they're telling you, and that causes people to mistrust the data. So that's one thing. As far as the deflation, I think there is potential for something like what we saw last March. CPI turned negative in March of 2020, because of the sudden shutdown of everything. But that wasn't, in my view, real deflation. The cost of living really hadn't gone down for people in reality. There was just this sudden economic, tightening of sphincters that produced that mathematical oddity, and it didn't last. So if there is another market crash this year or in the next 12 months, sure, you could see a temporary tightening like that. If the post-COVID recovery really turns downwards, instead of being square root to a new level, but actually comes back and then starts heading down again, there would be deflationary pressures. If the Delta variant, or maybe that's starting to get under control. If the Gamma variant, the next one, comes along and it's even worse, and there's more lockdowns and shutdowns, you could see stronger deflationary pressures. But this is one thing I do think would be transitory. At the end of the day, there is only so much prices can go down. There is no limit to how much money can be printed and how much more new money can be put into circulation. And what's already been done is still working its way into the economy. So I think to the degree that there is a case for deflation, it's short-term, very short-term. And I don't think it's even guaranteed. There's so much money printing going on, the new fiscal package coming through Congress, the Senate's moving ahead on the first trillion. And we got 3.5 trillion more in the wings. All this stuff is hugely inflationary. So if there is a bout of deflation, I would see that as a source of buying opportunities in commodities.
Buy the dip. All right, so shifting gears, following its market launch, Robinhood has become a hot topic among retail traders. Do you believe meme stocks will increase volatility for the overall equities market?
That is volatility. You're seeing it there, and it's part of the markets. And as these things get bigger, you got Coinbase, it's become whatever, hundreds of billions of dollars. That's big enough that Wall Street can't ignore that sort of thing. And when they fluctuate, you talked about, the regulations coming. What does that do to these players? It's a big deal. It's interesting. And it's a manifestation of how the world is changing. We talked about disruptor technology, DeFi, all this stuff is happening. But you're not going to have disruption with low volatility. I think actually it's a good thing. I think Wall Street deserves to be shaken up, should be shaken up. A better mousetrap comes along, that's fine. I'm not a millennial, you can see, but I was an early adopter of Robinhood. Free trading, why not? Okay, there are risks associated. Well, now they've forced everybody else to do free trading, and I'm not trading on Robinhood now because I'm concerned about the regulatory environment there. But I think that's fantastic. I think it's wonderful that happened, and I would like to see more of that. I think, in some ways, this is the market responding to that criticism of the 1% and Occupy Wall Street. Robinhood has occupied the bleeping heart of Wall Street and forced change. So I think that's great. But sure, look at the volatility. I see only more of that ahead.
Interesting. Okay, so you recently published a trading tip. You stated that you only use day-only orders when buying or selling stocks and not good till canceled. Can you shed some light on this?
Sure. Well, that has a lot to do with the type of stocks I'm buying. If I was, buying ExxonMobil or some giant company that's unlikely to suffer a fatal mishap, placing a good till canceled very low order to just hope to get lucky at some point over the next month, that somebody might hit my bid, that can make more sense in that environment. But typically I'm buying junior mining stocks. And not only are they more volatile, but they are subject to potentially fatal news at the drop of a hat. You can have your main project nationalized by a government. And by the way, that's not just juniors. That can happen to a bigger mining company, can have a key asset seized, like Centerra Gold just had in Kyrgyzstan with Kumtor. So that the whole mining sector, actually, by mainstream standards, is a junior sector. So all of these stocks are so volatile, they're subject to sudden reversals. Or on the plus side, they could have fantastic news and the stock can spike, and you could end up having, on the buy or sell side, you could have yourself making a mistake, right? If I'm thinking I want to get out of this stock, and I put a good till cancel offer on the table, and then suddenly it has fantastic news that might change my mind. Well, my offer will get hit at the time that I really would have preferred to stay in, or on the other side. So I always use day only orders, and I watch during the day. Actually, I will adjust my orders. If I'm looking to buy, I want a day when prices are going down, and if I see that, say it's a gold stock and gold's really going down strong, I'll adjust my bid to significantly below the bid-ask spread. See if I get lucky. So it's kind of a trading tip as opposed to an investment thing. It's not a buy and hold thing. It's about what I do on a day-to-day basis. And it really has to do with, like I say, the type of stock that I'm buying, I think, is more amenable to this. Now, just quick caveat, I've got screens and I'm at my desk all day. This is what I do. I would say 24/7, though my wife might think so. I live and breathe this stuff. I'm paying attention all the time. If you have a life other than this, or you have a day job and you can't put that kind of time into it, it might not be right for you. But for what people keep asking me about this, because they notice, my clients, they see that I use day only orders. Like, why do you do that? This is why.
Because you're keeping an eye. All right, so we have one more question for you here. We know you're very bullish on uranium. What needs to happen for uranium equities to leg up higher?
Well, I would like to say, as a fundamentalist, what needs to happen is the utilities finally coming to the negotiation table to contract with the miners for secure long-term supply, which will happen absent a major nuclear accident. That's a when, not if question. And the price will have to be much higher than now. So that's my bullish thesis. But you look at the track record this year, and I forget the uranium index fund, the UNMR or whatever that is. Kiko was just interviewing me about it. It's doubled this year, and the uranium price has been going. Yeah. So so what needs to happen for the stocks to go higher? Maybe nothing. Maybe just people decide they like the story and they pile in. That's what happened. Uranium stocks started going nuts, really not just this year, but last December. And at the time, uranium prices were falling. So I pulled back because if the value is going down and the price is going up, that's a less attractive opportunity. This is a Rick Rule saying, not me. I mean, I learned from the best, right? And now, actually, in recent months, we've seen the stock sort of coming back to reality, I think, with the reality being that uranium prices are still too low to pay miners. So the prices are coming down, and uranium has actually had a good couple months. It was off last week, but it's been doing better. So in my mind, you've got the underlying value coming up and the price coming down. That's more attractive. So right now, I have only 2 stocks on my shopping list for the independent speculator clients, and they're both uranium stocks because I think they present a better value proposition right now. And I'm hoping my stink bids will get filled with this market volatility that we've been talking about.
Yeah, exactly.
Day only
All
orders.
right. Oh, good. Okay. Well, thank you so much for joining us again, Lobo.
Thank you, Cassandra. Always fun.
Thanks so much for tuning in today. We'll see you tomorrow. But in the meantime, why don't you check out our next video?